This meeting is being recorded.
We are going to be recording this event. And also, if you have questions during the event, please feel free to add them to the chat, and we will have a Q&A afterwards. Today's presentation is by Stacy Romano, Assistant Vice President and Branch Manager of Toms River of M&T Bank, and Justin Kurzanowski. Did I say it right? No? Did I?
Yeah.
Oh, okay. Okay. Business Banking Relationship Manager at M&T Bank. And we are going to discuss how business uses and obtains credit. So you guys feel free to take over.
Well, thank you. We're really glad to be here. We think it's a good time of year for our businesses to start thinking about if they haven't already, start thinking about their year going forward and how business lines of credit or any kind of business needs can help them, their business grow better, give them better cash flow, equipment financing, things like that. So we thought it would be a great time to go over how to obtain credit and how businesses can benefit from using credit. So Justin is our specialist in this field, so I'm going to let him take over. We're going to have a presentation. We'll be able to share our screen, and we'll go through the, answer any questions that you guys may have. But I think it'll be enlightening for you guys.
So a little background about myself, Justin Kurzanowski. I'm local here in Toms River. Families here. We have businesses and all here too. Basically, I've been with M&T just over a year and a half. Prior to that, I was with B of A for 9 years. Prior to that, I owned a mortgage company, owned restaurants in Seaside and all too. So, I'm around the block. I've been doing a lot of financing for many, many years. So when it comes to it, I'm very straightforward, for what we're looking for. It doesn't matter if it's M&T, it doesn't matter if it's Wells Fargo, Chase, any of them. It's all the same documentation that everybody will need. This is a perfect timing because everybody's doing their taxes. So their CPAs are all on board. And that's the hardest time to get a CPA is this time, but you get all the documents that you need. So you need to make sure that the CPAs are being pushed for your clients or for yourself or anything that you're looking to do if it's business-wise or even personal, for mortgages and all. So can you go ahead and share our screen? We're going to just share a screen just on purposes for business use of credit. So let's see if you can see this.
Can you guys see that?
No.
No.
You got to go here to entire screen, share my. Okay. Let's see why it's not.
Click on the screen again.
There we go. Okay, now you're muted though. We can see the screen, but you're muted. I don't know why we can't hear you.
Okay, you can hear us, right?
Yes, I can hear you. Yes.
And can you see my screen?
Yes, I can.
Okay, perfect. So everybody can say it.
Yep.
So just getting started. This is just basic. Just hide this here. We'll just explore this. What is credit? What is credit used for? How do we obtain it? These are the questions that a lot of the clients all have. So what is credit? Credit is for a loan. We all know what it is. We all have them, personally, business-wise, any way. Credit cards, it could be credit cards. It could be, car loans. It could be for businesses, line of credit, piece of equipment, anything that's out there, that's what credit is for. So if we just go to the next one, I'm going to fly right through this because these are just all basic slides and all. What is credit? It's, you have interest rates, you have interest, you have principal, you have a certain term that you're going to pay it off within. Okay. An important part is for credit. How does it help businesses? Very simple. It helps with cash flow. How does it help with cash flow? Especially in these type of times, depending on the type of business it is, we are seeing lags in accounts receivables, for people to receive their money. So if they're doing a job and they have a 30-day credit, for that job, sometimes it's taking 29 days, sometimes it's taking 35, and they're letting it go that extra 5 days. So that person who did the work or did anything with it, what happens? They have to be able to pay for those goods that they sold. So in order for them to go ahead and receive their funds, that person needs, whoever they sold it to, needs to send it to them. And then what occurs is cash flow problems, payroll, day-to-day operations, rent, anything like that. So a lot of people, what they do is they get a line of credit. They're able to float it if they have to. Another option that people use for their day-to-day stuff is their business credit cards. And the reason why they use the business credit cards, it automatically floats it from 30 to 45 days for them. So if they went in and they bought some lumber or anything at Lowe's, they have 30 to 45 days to pay it back. So they get their money from their clients. So it's a free wash for them. So that's why it's important for credit for businesses, for the line of credits. The other one is if somebody's looking for a piece of equipment, just in layman's terms, like a car, anything like that. Most people don't have $50, $80, $100,000 in cash just to give. So they have to go on terms, for 3 years, 5 years, 6 years to go ahead and pay for that item. So that's what businesses could use their credit for. Same thing with real estate loans to go ahead and buy their office building, buy their manufacturing plant. That's why when the credit comes into play, tax returns and all are key. So the CPA all needs to be on board because you do need to make sure that you have 3 years of tax returns for personal business, because most of these loans, they're all personally guaranteed, even if the business is incorporated or in an LLC, a sole prop, you're personally guaranteeing most of these loans. And that's how most banks are. It's not a business, just a business guarantee. So if we go to the next slide, banking built for business. No two businesses have the same needs, which is the truth. You could use a restaurant as an example. Two separate restaurants, they don't have the same needs. They don't have the same clientele. One might be flush with cash, the other one might not be. So they look at ways to cut their expenses. For businesses, could be through merchants, it could be through, the credit card where they could leverage the 30 to 45 days for their raw material that they're going to be using. That just gives you an idea. So next slide is, what should I consider when exploring different credit options? This is very important, which everybody probably agree with. What are you using the credit for? What's the need? How much are you going to need? What are the terms? And what do you expect for the repayment? So businesses got to make sure that they are able to afford it. What is the true need for? So if somebody comes to the bank and say, listen, I need $100,000. Okay, what are you using it for? I just want to have it there. Okay. If you take a $100,000 loan as a term loan, you're paying back on interest. So what's the sense of taking that? Doesn't make sense because they're not using it for anything. An option for them will be a line of credit where they would either have a yearly fee, no yearly fee, and every year it gets renewed with updated financials. That would be a better idea for them. You know, as long as you know what the person needs that income, needs that loan for, the money for, is how you tailor the loan. Term-wise, you know, it depends on collateral, what the collateral is worth, how long the collateral lasts. So if you have a piece of machinery and the life expectancy is only 10 years, you're not going to get a 20-year term on it, because at the 8-9 year mark, that piece of machinery could break, and then what happens? You're not going to pay on it. So that's why, you know, everybody needs to know what the term is going to be, what the piece of machinery or a piece of equipment or real estate, what you have.
Also, what's good is a business line of credit, especially for our area now. All the summer businesses are starting to bulk up on their inventory, you know, buying supplies, whether they're in the food industry or on the boardwalk. So they don't have that income coming in yet. Well, how are they paying for this? So line of credit is perfect for them, because then they use the line of credit. Once they start getting revenue in, they could start paying it back, and it's a revolving line of credit. So it helps with the cash flow. They might have to start using it to cover their payroll in the early months of the summer until their business really starts picking up. The line of credits are a great vehicle to have. I just said whether you need it or not, every business should have it just in place, just in case they need cash flow and they have an opportunity to maybe take advantage in buying something with discounts, and they could buy it quickly.
And the other thing, talking what Stacy had brought up, when you're going ahead and trying to get a loan, you're better off getting a loan is when you don't need it, because your financials are much better when you don't need something. So you're not extending yourself. So if a place is not extended and they want a $100,000 line of credit just to sit there, that's the best thing. Even if it costs $250 a year, it doesn't matter. You know, it's part of the business. But if all of a sudden that business runs into financial difficulty, we all saw it with COVID. We all saw this area with Sandy, you know, so everybody was needed money to rebuild because they were waiting for insurance money during Sandy. Well, the ones that had a line of credit, they were able to go ahead and rebuild. They were able to go ahead and get things that they needed done immediately. That's the difference. So all CPAs, everybody, financial advisors, you know, they're going to look at it. They're going to tell you the same thing. Make sure that you have it open. Make sure that you have some money accessible to you, especially not your own money. You know, you don't want to keep on dumping your personal money into your own business. You have to be able to separate it. The business needs to be able to support you personally, but you don't want to keep on dumping that money back in. There should be a repayment, because you don't want the negative residual keep on adding up every year. So here's information in regards to credit cards. Very simple. We all know what they are. You know, drawbacks are high interest rates. What you want to do is you want to go to a bank that offers it for no cost. You know, there's no annual fee. You know, we know with American Express, there's a lot of annual fees, you know, that are involved depending on what type. You know, if you go ahead and you use a credit card, don't expect to carry a balance. You know, don't get fooled into, you know, the 6 month, 1 year interest free on it. That's what credit cards are not used for. Credit cards are for purchases to go ahead and extend your cash flow for that 30 to 45 days. And when you get that money that comes in, you pay it off immediately. Also, what helps with credit cards, and a lot of people don't realize, is depending on the type of business. So if you have a landscape company, and you have 4 or 5 trucks that are out there, rather than the owner keep on going to the store, keep on going to the gas station with all the trucks, all the gas cans and everything else, he could actually give his foremen a credit card and use it for gas. And it's authorized users, and you're unlimited. You get a 4, you get a 5, you could have 10, 15 cards for authorized users, and then you could set the limit of what they could spend on it. So that actually helps out businesses and especially business owners. But just remember, the business credit cards, along with the line of credits, they are personally guaranteed by the owners of the company. And then if you click on line of credit uses, even out cash flow, acquire inventory, take advantage of trade discounts. Exactly what Stacy was saying. Benefits is revolving credit. It keeps whatever you spend, you pay back, then it gets available again. Okay, usually on the interest rates on line of credits right now are realistically probably about 4.75 to 7.75. That's where they're at, depending on the industry, depending on credit and their collateral, what they have. If it's a smaller line of credit, usually it's no collateral, it's just personal guarantee along with business guarantee. You guys have questions or anything?
I have one question.
Yeah.
So we're a 501c6, and we also have a lot of 501c3s in our membership. How does that, what's the difference? Is there any difference with like a nonprofit or a not-for-profit taking out a line of credit or anything like that?
Yes. So the nonprofits, it's tough because there's no true ownership of it. It's a board. And nobody ever wants to foreclose or do anything against a nonprofit. So a lot of times they look for collateral. If there was a building, like if, depending on what type of nonprofit, say it was for medical and they have a medical space that they own, they would like to have a lien against that and see what type of donation, see how you're getting your money that comes in and how you're supporting yourself and what type of reserves. So to answer your question, yes, you can get a line of credit. There is no personal guarantee. It's just a guarantee of the nonprofit, but they will look at 3 years of the tax returns for the nonprofit. They'll also look at your ARs, your accounts receivables and accounts payables, what you're paying out on a monthly basis, and what your reserves that you will have for that business.
Okay.
They will do a deep dive in for nonprofits. They're hard to get through, but some banks do them. We're one of them that do. It's common with churches, synagogues. They're difficult. We look at what the donations are. To give you an example, they'll see what the trend of the donations are. If they see donation trend going down to get credit on it, it's just like you have a business that you're selling stuff, and when you look at the sales trend of going down, the likelihood of you getting any type of credit facility is not likely.
Okay.
Quick question.
That answer? Yeah.
Yeah, you did. Thank you.
So just a quick question. You talked a little bit before about accounts receivables, about credit lines. I've always noticed that whenever you're applying for a loan or a credit line, there's a lot of questions about your current account receivable. And then when you have to do updates, they're always, what's your accounts receivable? And someone had told me once that accounts receivable over 30 days, over 45, 60, it starts to get discredited based upon collectible. Can you talk a little about that? How much of that is real, and what does the bank look at? Yeah,
so basically what the banks look at is if you have if you have a business that you're getting everything in 30 days, I'll use wholesale. I'll use a wholesale restaurant type business, okay? Because I'm very familiar with them. So if I have a client, and I'm just going to start using some restaurants that are around here. Office Lounge. Office Lounge pays in 14 days. So I give them the product, they pay me within 14 days of that ticket. Then I use somebody else, B2, that's right here. So if I use them and they pay 30 days, and then I have on a boardwalk. So you're using, say, like Coors, ice cream place, and they're at 30 days. So now at the end of the season, Office Lounge, they're paid up. Every 14 days, every 7 days, I don't have a problem. B2, every 14 days, they paid up. Now, up on the boardwalk, it's Labor Day weekend. Are they having revenue that's coming in September? Not as much. So we're going to discount if that person owes us the money, owes that client the money who's trying to get a loan, and it's at 45 days. It's at 60 days, because the likelihood of them getting that money, they'll eventually get it, but they're not going to lend them anything else. They're not going to sell them anything else. Does that make sense?
It does. So it brings me to my follow-up question. So if you're a business that sometimes your AR drags behind,
mm-hmm.
Are you better off with a fixed loan than a revolving or line of credit? Because then your chances of maybe getting a larger loan, better terms, are better than if it's always revolving, because as your AR gets older, it may impact your credit line.
So they're not looking at the ARs on a monthly basis. So if you get a loan, say you get a loan through M&T, you get a line of credit. We may ask the following year for your updated financials. So every year we could ask for your financials, your ARs, and your accounts payables. So to that point, I wouldn't do a term loan, because you're paying interest on that money if you're not using it. It could be just sitting in your bank.
Right.
So like all that PPP money that people got, that all these CPAs, it's cheap money for the EIDL loan. Yeah, it is. Some people got $200,000, $300,000, $400,000. That money's sitting in their bank account. They're paying interest on it. They're paying interest on that money, and it's just sitting in their bank account for what? They're not using it.
Right. Yeah.
So you're throwing away the money. So I wouldn't do a term loans are to get yourself out of debt. So if you had a line of credit and you bought a piece of machinery with it and you want to turn that piece of that debt into a term, that makes sense.
Gotcha. Okay.
That makes sense. For revolving to get more product or anything else, it's 45 days. I mean, realistically, 45 to 60 days is most businesses. If they buy a piece of inventory that they need to get rid of it. That's all. It's not usually a longer term. The only time that you see that is sometimes with builders, contractors. You might see a 60 and 90-day AR. A lot of banks aren't too worried about that because that's a common theme. If an industry has a common theme, they're okay. But if you're an oddball, where normally everything is 30 days, like if you take a restaurant wholesale company that sells fish or sells meat or anything else, and everybody's within 30 days, and all of a sudden you have somebody that's 90 days, I'm not going to take that. That 90 days does not make sense.
Right.
It's because it's going to cost you more money over the long haul, even though they're probably charging that person a lot more money for that piece of meat, piece of fish, or produce, or whatever it is, compared to somebody else. But that's how you look at it.
Thanks.
You're welcome. What other questions? Because I'd rather go back and forth than slides. So I'm only using this as a guide. So if you guys have questions off this topic, I don't care. Just ask away whenever any type of business questions. It could be merchant, it could be loans, it could be anything. I'm okay with that. You know, credit options, benefits, drawbacks.
Yeah.
You know, for long-term financing. You know, this gets to the questions that we had before. So, you know, the benefits. You know, it's benefits of the credit is you can expand your businesses, you improve your cash flow. You know, you always have that money sitting there just in case of an emergency. So drawbacks of it is, are you going to qualify? That's why it's important for you. If you're in good financial spot right now, you'll always have something available for yourself. So you set it up immediately, and then you, if something happens, it's already there. You're not waiting, because you got to remember most of the loans, they're not overnight. They do take 30 to 60 days. You know, if it's a purchase, it can take 6 months. You know, we had one that I worked on, took over a year, you know, for a big brewery, you know, so it takes time, you know, for us to go ahead and get these loans done. Interest rates, it depends on the businesses. It depends on the collateral. It depends on personal and business credit. You know, not everybody is the same when it comes to it. You know, just remember that because your credit might not be the same as my credit. You know, your assets might not be the same. So there's always variations a little bit here and there. Yeah, let's go there. So in order to get credit, how do you get credit? We know about the days of no documentation loans are pretty much gone. You know, what is needed? You need to know what your sales are, what your net profit is, what your inventory is, what your accounts payables are. You know, you need to know what everything is with your business. A lot of people, when they first start out, they use everything for personal, okay? And they don't get paid back. They don't pay themselves back. They'll use their personal credit cards. Well, that's all well and good. Your personal would be fine, but you're not building any type of business credit. So every business out there should have a business credit card. They shouldn't be using a personal card. The reason is you need to establish business credit. And that's the fastest way to establish business credit. Same thing, what is credit? It also covers cash flow, purchasing of new equipment. Criteria for approving, okay? This is where I said not everybody's the same, because not everybody has the same credit, same assets, same sales, you know, so everybody is looked at. For today's world of lending, it's a lot of common sense that's still involved, which is good. You know, everybody's going to look to see how much your sales are, what's growing, you know, if it's a inclining, if it's a stagnant, or if it's a decline, how people made it through COVID. That's a big concern right now. Are people getting through COVID? How did they go ahead and adapt?
5 C's of credit.
Yep.
Capacity, credit.
Then your capital, collateral. What type of collateral that you have? More collateral that you have, if you have collateral, the better rates usually occur. Okay, for a line of credits, what they usually do, they'll follow a UCC filing. So that's any asset that's attached to that business.
And it's okay to start small too, I think.
Yeah.
You know, we do $100,000 unsecured line of credit. Mm-hmm. You know, that's a great way to start, and you know, start borrowing small, and that'll build your credit. Whatever you can borrow, you can pay back in 45 days. That really helps your credit.
Absolutely, it's the same thing as a credit card.
Yeah, so it's great to start small, and we do as you know,
$25,000 loans. You know,
line of credit, unsecured. Very, very helpful for a business.
So some of the things that you need, depending on the size of the loans and all, business plan. You know, if you're going SBA, they do look for some type of business plan, financial statements, your revenue sales figures. You see here your personal, your business scores, your personal business tax returns, bank statements. You know, they're asking for everything. You know, we evaluate everything.
I wish Frank Minetti was on the call, because this is where he comes in and can put all this together for you.
You know, so your assets, what you have, what you don't have, what you're looking to obtain, so on and so forth. And here's another thing that people don't realize. If you're with a banking institution, it's not easier, but it is if you use the same bank that you're banking with, because they do look at what you have in the banks, what your character is. It's part of the C's that are there. So they'll be able to see what your trend is. So like if somebody came to us and we didn't know anything about them and they came for a $100,000 line of credit, right? Just unsecured, and they don't have anything with us, we might have to get 2-3 years tax returns. So now if that client was with us and they have money in the bank and we see their transactions, it might just flow right through. So that happens. So that's something that always to keep in mind. You know, you want a bank that has that availability to do so. And not every bank does. You know, some banks out there don't. You know, and the other thing is you want to see what they'll work with what they have.
I have
relationships.
Yep.
I have one quick question for you.
Yeah.
So say you are to get a line of credit, and then, so how does the process work? You apply for it, say you were to get it, it's how you're charged on how much you take out? Like, how does that work?
Yeah, so here, I'll just use this as an example. So if you're a customer of ours, you come in and you want a line of credit, say for $50,000. You go see Stacy. Stacy will go ahead and put it in the system for $50,000 for the line of credit. You're a customer of ours. There's a good chance that it might not even ask for any tax returns, anything. Okay, you might get an instant approval that's there, and then you would just go ahead and within a couple days sign the document stating that you want the line of credit. You sign it, and usually it's a cost of $250.
And then you only pay interest on what you borrow.
Correct.
You write a check for $1,000, you're going to pay interest on $1,000.
Okay, so you only pay interest on what, if you use it.
Correct. If you use it, correct.
Okay, so there's basically like an annual fee if you don't use it, for just to have security and safe, like that it's there.
Yes. Yes, okay. And it depends on what, you know, if you're a client of ours, not a client of ours, you know, the fee could be a little different, $100 difference. It's not much, but
usually if you open up a line of credit, it's best to get, if you're not with that bank, it's best if you get a line of credit from them to open up a checking account with that, because you could do it right online. So if you're, you know, you want to go buy something early in the morning, you're online at 10 o'clock at night, you could just transfer that money right from your line of credit into your checking account, and you have that availability the next morning. And
most banks require you to have that account linked up to an account of theirs. Okay. So any payments because of automatic pay. So most line credits, like you know, anywhere you go, B of A, M&T, Wells, they'll all ask for the same thing. You know, they'll want to see an account attached to it.
Okay.
But if once you start getting to larger amounts, yes, there is more fees that are involved, with usually over $250 and above. You know, because the process is a lot more intense. You know, there's write-ups that are done. It's a full deep dive in the financials. You know, you're looking at 3 years personal, 3 years business. You're seeing what depreciation could be added back in, seeing how your CPA goes ahead and sets up your business and your balance sheet. You know, you're looking at your P&L for up to date. You're looking at the ARs, you're looking at the accounts payables and all. So it's a lot more intense, and there's usually a little higher fees for them. And then every year they usually get looked at every year. They'll ask for just updated financials. So that following year, you would just give them the prior year's returns.
Okay, so that was my next question. So say you have this, and then just every year they're going to require, if you don't use
They could.
Okay.
They could require you to send it.
Okay.
So I'd rather tell everybody, yeah, just make sure that you have it. So I'm doing a couple of reviews now that we're looking at. They've had it since 2017, and what is it, 22, and I'm asking for returns now.
Okay.
So it depends.
It's just like an annual fee. So every year you're charged. Okay. Thank you.
Yeah, that's it. That's it. And you only get charged for what you use.
So a follow-up question to something you said a minute ago. You know, we're hopefully we're in an endemic now, they're saying, so we're coming out of it. But over the past 2 years, between PPP money, idle loans that became grants, and different things, in some situations, your books don't look too bad. Okay. You have income that you didn't account for, and it got forgiven 100%. So you're like, wow, this is great. You as a bank, if I walked in now, how are you looking at the past 2 years on the side that it may look better than it did 3 years ago?
So very simple. So if I go ahead and say you did $10 million in sales, right? And prior, it depends on, I'm just using it as easy numbers. Prior year, you did the same. We're very similar. Difference is you have $600,000 more of income for this year. Well, then I look at the PPP money that came in that was forgiven of $600,000. Well, what's your net? Zero. So we'll deduct that out. We'll look at it.
So you are looking at it that way.
Yeah, every bank's looking at it because you have no choice. You have no choice on it. You have to look to see where all that money came from. Was it true sales, or was it basically given to you? So if you had all your payroll taken care of for 5 months, that cost, who's getting that money? And say your sales were really good and they kept on climbing. That's just net profit for the business.
Yep.
Some people were smart. They started getting their vehicles and everything else, whatever they needed from the sales of their company. Maybe 6 months down the line, 8 months down the line, when everything's forgiven and all, and they see their excess of money, their accountant might say, okay, this is a good time to buy a piece of equipment that you've been eyeing or anything else. Because it's all legit. It's not, they're not using that money to go ahead and buy it. This is from their sales. And
that's why the tax returns show a really good picture. And we also too, we consider depreciation. So if a business is showing a loss, but they have a really large depreciation that year, we add that depreciation back in. So now that depreciation's added back in, now they could afford the loan. So that's why the income taxes are really important.
And then you also look at the personal income too.
Gotcha.
So the personal income is involved in the decisions.
Okay. Thanks.
So to your point, yes, they're looking at the full return, where the money's coming from, and everything else, because they don't want to lose out on the money, their money that they just lent out. So where can I get credit? Traditional lenders, alternative lenders. Just think about it. Traditional is what? It's banks. Alternative lenders, they're not banks. They could be those, off their merchant statements, those type. You got to look at what's best for your company. What's best for your client's company. So eligibility, same thing. Good credit. You have to have good credit personally and business. If you don't have good credit personally and the business credit's okay, well, there's a reason for it. So you have to have good credit for both, on it. Flexibility of terms, fees, time, everything comes out to the type of loan and what it's going to be used for. for the fees. You know, if it's a real estate loan, fees are higher because you got more people involved for you have title, you have attorneys, you have the bank, you have appraisers, you know, so there's all different type of fees for each loan. Time wise, less complicated equals less time. And that's the truth. Mm-hmm. So if you have just a small line of credit, that's going to be quicker than a purchase of a property. Because what most likely, if you're getting environmentals, you're getting appraisals, you're getting everything that's done on a title, each step takes a lot of time. You know, for an appraiser right now, they're swamped, so they could be 30 days out right now. Environmental, I'm dealing with one right now. It's been a year that they're dealing with environmental issues. So you never know. You never know how long something's going to take.
That means they're not using the right consultant.
Yeah, I wonder who that could be.
Yeah, you know, it depends on what they who they use and everything else, and that's the truth. You know, same thing with the lenders. You know, some people are able to get through, some people aren't. You know, a lot of times it's out of the client's hands. It's the hands that they put their stuff in that takes the most time. So if they're waiting for their CPA to go ahead and finish their year to dates for this year, you see that. Well, that firm might be too big. They might not be able to do what they need them to do. Or did you get your information to your CPA that quick enough? So, you know, this stuff is all basic, you know, interest rates, how much I can borrow and things like that. So that's all the same. What other questions do you guys have? Anything else?
They are having a hard time getting credit.
I have one question. Can you guys hear me? Because I think I might be lagging a little bit.
Yeah, I can hear you.
Awesome. So I just had a question. I think Phil mentioned it last week at an event or a couple weeks ago. So there's a Toms River Small Business Committee being created. And there was an article that I saw that reminded me of it. Do you guys think that's going to influence a lot of small businesses or give an incentive to develop more of go for a line of credit?
I mean, if they're, you know, you're talking about the one that Josh Kopp is doing?
I believe so, yes.
Yeah. So that, you know, he's going to be an advocate for small businesses, and you know, we work with a lot of small businesses. That's what our specialty is. That's what we like to, our niche, because they're part of the community. So I think that'll bring more awareness, and it'll educate a lot of more small businesses to, you know, look for credit needs. So yeah, I think it'll help. Does that answer your question?
That was great. Thank you.
And the great idea would be that if the township would turn some of the money that they have from the leftover CARES Act into matching grants. So that if somebody walked into M&T Bank and said, hey, I need $50,000 and, you know, I can get a grant from the town for $50,000 to get me $100,000, that would be something that would be beautiful to do. Where it's a grant of $50,000 and a loan of $50,000, but they got $100,000. So I think that's one of the things that's on the table right now.
That'd be great.
Yeah, a lot of that's going to have to do with small business administration, because usually they back out those type of loans, or the community development and all too.
There's so many grants out there, and people, you know, people don't even know about them. I mean, if you start Googling grants for businesses and go to the SBA website, there's a lot of things out there.
That's on this page here. Like if somebody didn't have the best business credit, personal credit, they could use SCORE. That's a nonprofit organization that goes ahead and helps mentor your client, yourself, whoever it might be, to go ahead and get them a small business loan eventually through the SBA. And then you take a look at the community development. That's most banks are part of it, you know, so it's backed. These are backed they're not, the banks aren't taking a big hit on it. So if they do, default, you know, it's not just the bank, just like SBA, you know. So small business administration loans, we all know what that is. We've all dealt with it just with COVID, with the open lines that currently occur. But that's basically it. That's basically it for our presentation. But for the slides, any other questions? Anything?
I was just going to say, if you know, in a short synopsis, you know, somebody needs a line of credit, overdraft protection, credit line for a piece of equipment, and they're going to walk in the bank today, what should they have in their hand?
3 years tax returns, personal business, plus their ARs, accounts payables, and they should have their profit and loss and balance sheet.
Does it matter if they're an LLC versus a corporation?
Doesn't matter. Doesn't matter.
You know, but also I've done, I just, you know, what's nice about M&T is that we really look at it. We just did a startup business, and we were able to get them a credit card with a significant line of credit available to them through the credit card. And that was no docs needed. So that's a great way to start, because, you know, especially now, you know, Justin talked about it, but, you know, we have 2% cash back on a credit card. Most, you know, of course, most banks and most credit card companies are offering, you know, cash back. So 2% cash back, you start using that, yeah, that 2% starts building up. You know, and then and also too, interest-free for a year. So, you know, for somebody that's maybe just starting up a business, needs some inventory, they have personally really great credit themselves, you know, that's an option for them.
But for your scenario, that's what they should have. They should definitely have it, those 3 years tax returns. More information. Go ahead.
I was going to say, it's interesting if you get one of those credit cards for business that is, you know, travel points or airline tickets and all those good things, which we think are all great. You should make sure you include that in your partnership agreement, because when your partnership goes bad and the person says, I want 50% of those miles, that's the biggest fight at the closing table.
Yep. And it doesn't matter if it's a partner, family members, it's bad. It's always bad blood. Yeah, absolutely. But yeah, you take a look at the scenarios that you gave. It's not hard. The clients just have to know what they want. You don't want to see that. You don't want to see anybody just go ahead and spend money just to spend it. They just need to make sure that their need is covered. So for your scenario, line of credit, they're looking at the future. Line of credit for what's it called? For a piece of equipment doesn't make sense. Somebody came into me, no, don't use a line of credit for a piece of equipment. That should be termed out, just like how a car loan works. It's the same thing. So you're giving them the advice that's there.
That was scary. Thank you. Sorry, my picture came up too big on my own screen. But no, you're right, Justin, right?
Yes.
Yeah. I have to ask the question though, and I don't want to monopolize this time. Okay, you mentioned 3 or 4 times you own restaurants and stuff on Seaside. What do you
my family does. I used to have a place over in Seaside. I got rid of that in 2007. But my family's in Toms River.
They own what?
Pisces Seafood.
Oh.
That's my uncle's.
Okay.
Yeah, been there forever.
And they're chamber members.
Mm-hmm. Yeah. Yeah, my uncle's been there 47 years.
Awesome.
Long time. But no, that's why, you know, it's important, like for a lot of business owners, especially in this area, a lot of them don't have like a line of credit. You know, they never had it. It's always cash involved. You know, they have the cash and everything. They self-fund it. But, you know, if somebody is able to lend them the money, they might as well have it. It makes more sense because you never know. And I think when Sandy occurred here in Seaside and Seaside Park and Lavalette and all, they started realizing how important it is, not even on the business aspect, just on their personal side, if they had a home equity line that was free and clear, they were able to start getting their things together a lot faster, you know, and then you didn't see those people wait 3-4 years just to get their houses up and running. Because it affects both, affects personal and business.
I just want to say something too about Justin. I mean, he lives in this area, knows this area, has businesses in this area. He understands our community.
Yeah.
So he understands the businesses' needs and the seasonality of the businesses in this area. So he's a great advocate for our businesses in the area when they're applying for loans and things like that. Yeah, he can talk really well about it with our underwriters.
We look at it. We look at common sense lending. You know, we want to see the full picture. Like I'll be 100% honest. Like anybody who knows me, I'm very straightforward. When you look at the financials for clients, it gives us a full picture. So when I have to go ahead and submit that loan to my back office, to the underwriters and all, literally, if it's say a $500,000 loan or $2 million loan, that write-up will take me a full day. Because I need to know everything about that business, everything about that person, good, bad, ugly, because it's going to come out no matter what. So if I could overcome that, it's a lot easier. You know, we went ahead, we did a brewery. I can't say the name, but we did a brewery, very large. You know, he's building it out and everything else. And, you know, we took the time. It took forever, but it was the right move for him. You know, could be, I've done some different loans here. I've done cemeteries for crypts. In all my years, would never even think about it, but we were able to do it. It was common sense. It made sense. So, you know, you look at that, you're able to do it. You know,
we want to help the businesses. Yeah. We want to make the businesses succeed. We don't want to put them in a position that they're not going to be able to repay that loan, or it's going to put stress on their company.
We look at everything.
It's important.
We look at everything. We look at their growth, what their expectation is for growth. You know, and having a lot of people in Monmouth and Ocean County, we probably have about 5 of us that are in this area. So we do know a lot of different businesses, and we see the trends. We also see trends of current clients. You know, most of my business is all from clients of clients of clients of clients. You know, it's all referrals. That's what it is. You know, and that's what you see in most of these branches that go to M&T. Because M&T is not like a Bank of America or a Wells Fargo. They're not, you know, shoving it down your throat with the advertising and all. So a lot of it is word of mouth, and it's more of a community feel, and you get that large bank. That's the difference.
That does make a difference. Mm-hmm. Did anyone else have any other questions? No? Thank you so much for your time. It was so informative. Again, we are going to add this to our YouTube channel, and it'll be available to our members as a whole and also the public. So if you're okay with that, that's great. And then thank you everyone for joining us today. Next month, we are going to learn about are you properly insured? And that is going to be, our speaker is going to be Marina Uset.
Joseph Guamos.
It's a Marina pronunciation. So thank you all for joining us. And
thank you everybody.
If you
can giving us the opportunity.
Join us tomorrow at Member Connect. We will be there. We have 50+ people going to be in the room. So it's going to be a great event. So again, thank you everyone for joining us. And if you need Stacy's information or Justin's information, please reach out to me and I can provide that for you. So thank you again.
Thank you guys.
Thank you.
Thank you.
Bye-bye.